Mahantesh Sabarad, the Deputy VP Research, SBICap Securities, joining in for a quick chat. Mahantesh, hi, good to see you in this afternoon. One big stock for me today is obviously Sun Pharma and the fact that, they've got that US FDA final nod for Gleevec generic, that cancer drug. How big an opportunity is it for Sun Pharma?
So, without talking about what's the big opportunity, what I'm trying to would like to touch upon is that Sun Pharma is transitioning into a phase where, post its merger with Ranbaxy, this is something that they have been trying to do in terms of the entire integration. So one portion of that is while doing this integration, US FDA has come out with various set of observations on some of their own facilities and a few which are pending from Ranbaxy. So the current set of FDA restrictions are being gradually addressed, and therefore we have this news right now about the cancer drug for Sun Pharma. Potentially, in terms of the total revenue size for this particular drug, could be in the region of $30–60 million. That's about is what we understand, unless we have another data points related to that. But yeah, it's a positive development for the company if they continuously address the integration issues, address the FDA problems going forward. The trend seems to be positive.
Okay, Mahantesh, let's talk about some other sectors and stocks. You like PSU banks now?
So what we were looking at is that the entire stress formation in this in the economy that we were doing. So the basic story of the PSU banks has been that there's been considerable stress formation, and they are in a way unable to come out of it. So what we are looking for are two things. One is the overall recovery in the economy itself as the investments revive, driving better quality assets into their fold. At the same time, the ability of via the RBI policy that have been initiated, the ability to address some of these stressed assets and bring them on track is something that we think is likely into the year ahead. And therefore, we were looking at some of the PSU banks. And then what we were looking at is that in terms of pure stock performance, they have been battered so much that when they start rising, there will be a huge percentage gains that you will see if this story plays out the way I'm trying to tell you.
Okay, well, auto stocks haven't had a good month of sales in November. Which one stood out for you for good or bad reasons, and what's your take?
So actually, more than the monthly performance, we would rather look at what has been the quarterly performance because you have had, and this is classically the case in terms of the festival season, that you have had a festival season this time around, which is roughly about 20–22 days late than the previous year. So if you want to ease out and take a consolidated view about what's happening for the quarter, then and purely from production numbers, the industry hasn't really grown. So the passenger vehicles have grown the same 7% that they grew by in the first quarter into the second quarter. So something similar is likely to happen in the December quarter. In fact, if at all, there would be a slightly slower growth because of the Chennai flooding issues and some of the auto ancillaries being affected and auto production sites also getting affected. So we will see a particular pain out there. But having said that, what is striking in terms of the numbers this time around is that I think Maruti did relatively well. Not the November number, but I would add the October and the November number put together, that they are considerably up. October was, if I remember correctly, about 30% up, 29%. November is probably just about 10% up. So the combination of that is a fairly strong growth.
So apart from Maruti, any other picks that you have in this segment?
So we would look at Hero MotoCorp, but that's really a longest trend that we are talking about. And let me give you a disclosure that I do own the stock. But then what we are seeing here is that the two-wheeler industry as a whole has been flattish, marginally degrowing or marginally growing positively. The trend seems to be ahead that as we go into the next year, you will have triggers coming in the form of the pay commission report and the effect thereof. You will have agricultural distress receding as we get into the subsequent years. And the rapid pace of urbanization that is happening will continue to bring in more and more volumes for a two-wheeler.
So that's your long-term pick. Okay, metals is interesting because we have seen quite a bit of relief rally already in some of these names like Tata Steel, and GSW Steel in particular has seen rally already, and you still like both these names.
So the story on the metal space is that we've been observing, particularly the steel space, is that we've been observing the profitabilities of various companies globally, and China being the biggest driver of what happens to the steel sector. The profitability index of the Chinese companies has been at a 7-year low, which tells us that now is the time that probably there's an imminent shakeout that is likely to happen among steel producers out there. Considerable inventory has been destocked already, so we expect restocking of inventories to happen as we move into the next calendar year. And the spreads of global producers is also at a 5-year low. So, 5-year low spreads, therefore profitability index very low, an imminent shakeout likely to happen, restocking to begin. So these are indications that tell us that probably the steel sector is likely to do well. And the obvious choices in the market among the large caps are these two stocks that you just named, JSW and Tata Steel.
Okay. What about a couple of these infrastructure stocks, say the likes of a GMR Infra, where there is some buzz about fundraising, and a couple of the smaller stocks which have run up as well?
So I think within the infrastructure space right now, the government's focus seems to be on roads as well as rail. So barring these two sectors, a GMR which has a presence even in airports, for example, is not really going to see any uptick in terms of the infrastructure spends that the government is going to do. Having said that, they have their own debt problems already. So of any fundraiser that they manage to do to address the balance sheet concerns can be viewed positively. But this time it is only an intent. I don't think there will be enough appetite among investors to go for a fundraiser of the equity kind for GMR. So it's a long haul.
All right, Mahantesh, thanks a lot for your time today and talking to us with all those stock ideas. So that's some stock ideas from Mahantesh. Before we take a break, let's hear out some wealth creating ideas suggested by SP Tulsian earlier in the morning.
They are market leader in making exhaust system, and that's a key component of any car. And the best part is that they are making for all the capacity, 620 cc to 8700 cc. Plus they are making for the trucks up to 27 tons also. So obviously they have a very rich clientele like M&M, Hyundai and all that. Net worth is about close to 220 crore. Debt is very small, just 75 crore. And that too largely to finance